And we're pleased to be joined by Kathy Clay, the CEO of S&P Dow Jones Indices. Kathy, it's great to have you here. Welcome.
Thank you, Kelly. It's great to be with you.
Am I overplaying this? I mean, to me, you guys don't have that many indices. It's kind of a big deal if there's a crypto one now, right?
That's actually right. We think about the investing nature of digital assets, the appetite to bring some sort of trusted, investable benchmark into this space. And so we've been very intentional about working with the right partners to bring a digital asset index that we think is more corollary to something like the S&P 500. And so working with Pantera Capital has been an amazing experience for us to bring this new index to life.
Although a lot of people over the past couple of years would say the churn we've seen in digital assets has made you wonder. I mean, the average turnover in the Dow and S&P is much lower. Here's what's in it now. You correct me. There's 18 constituents total. The largest 5 are Ether, Binance Coin, Solana, Tron, and Hyperliquid. So what are the requirements? How much turnover do you expect? And what do these choices represent?
Yeah, so let's just admit that digital assets moves faster than equity assets, for example. But what we're trying to bring are the same sort of principles that we have in our equity indices into digital assets. So when you think about the seasoning period, the revenue generation, the listing requirement, the liquidity behind these different protocols for these tokens, these are the things that we think matter for serious investors and asset managers in the digital asset space. And so we think because there's this likeness between what we deliver in equity indices and into this new benchmark for digital assets, we think it'll make sense for the investing public.
But Bitcoin's not in here?
Bitcoin is not in there because it's really not one of those revenue-generating protocols that we think belongs in this index. It meets all of the criteria, which there are many, in order for inclusion in this index. Now, this index, just like our other equity indices, will rebalance on a quarterly basis. The top token is capped at the 35%. And no other token can receive more than 20% of the balance in this market cap weighted benchmark. So we really think that people will find the synergies between equity indices and crypto benchmarks in this new index quite compelling.
And obviously, a lot of crypto fund managers will now use this as a benchmark for their performance, and people can kind of use this as a shorthand for its performance relative to, and I think it's interesting as you emphasize the revenue-generating aspect of some of these things. Is all of that legal? In other words, as we wait for the Clarity Act and all of this to pass, just explain once again, how do they generate that revenue for holders? Where is that revenue coming from?
Yeah, so these are really utilitarian-driven revenues. They're not yield-bearing instruments. And so these protocols actually have revenue that are coming from the actual usage of the protocols that we're measuring. And we really work closely with Dan Moorhead of Pantera Capital. Now, Pantera Capital, as I'm sure you know, Kelly, is one of the leading investor firms into the digital asset space. And so our methodology really looks into how are these protocols generating revenue outside of yield-based investing. And that's really how we decide what the constituents are in this new benchmark.
All right, Kathy, I want to move on and just ask you about 2 more things while you're here today. The first and foremost being your decision not to fast-track SpaceX inclusion in the S&P 500. How did you come to that decision?
So that was after a very lengthy consultation, which we typically issue when we even ever contemplate a methodology change. And so after receiving a lot of public input into whether or not we would change our methodology for fast inclusion, the independent index committees at S&P DJI really made the decision to stick to the course, to stick to our methodologies, to not move on allowing these mega IPOs to enter on a fast-track basis into the S&P 500. But this is always done with independence, with a lot of integrity, and with a lot of input from the public when we issue these consultations.